Hey everyone, and a huge welcome to a brand new explainer right here on the GAAP Advisors Ind AS Clinic YouTube channel. Today, we're unpacking something that, let's be honest, kind of ties even seasoned finance pros into knots. We're talking about differentiating between fair value hedges and cash flow hedges under Indian Accounting Standard 109. Let's dive right into the source material together and get a crystal clear understanding of how this whole shebang actually works.
Now, before we get into the weeds, just a quick heads up. The views expressed in this explainer are the personal views of the author and they're not binding. We always recommend you seek out an expert's help before taking or, refraining from any action based on what we chat about today. Think of this as a purely educational deep dive.
All right, here is our roadmap for today. 1. The accounting standards imperative. 2. Hedging basics. 3 and 4, we'll do a head-to-head of fair value and cash flow hedges. 5. Handling currency risk, and finally, 6, joining the GAAP community.
Let's start with Section 1, the Accounting Standards Imperative, Protecting the Investor.
So, you might be asking yourself, why should I care? We often think of these complex accounting frameworks as something locked away in corporate back offices, but they actually have massive, real-world stakes. I mean, why should any person investing their hard-earned money in shares of a listed company need to understand these standards? If you're a retail investor, you might assume Ind AS 109 is just for auditors, but trust me, it's really not.
The truth is, understanding this stuff is absolutely crucial for protecting your own money, because it reveals a listed company's true financial risk and exactly how they manage it. Before we even look at hedges, let's quickly set our baselines. The standard reporting period in India runs from April 1st to March 31st, and our functional and presentation currency is the Indian rupee. That means literally any other currency is automatically treated as a foreign currency. Keep that in your back pocket as we go forward.
Moving on to Section 2, Hedging Basics and Parameters, Defining the Core Terms.
To really wrap our heads around Ind AS 109, we got to get our terminology straight. Think of it like a giant puzzle. On the left, you have your hedged item. This is simply the thing you're trying to protect, like a financial liability exposed to market risk. On the right, you have your hedging instrument. That's the actual tool you use to protect it, like an interest rate swap contract. The item is your exposure, the instrument is your shield. Make sense?
Section 3, Understanding Fair Value Hedges, Fixing the Value.
Okay, so how does a fair value hedge actually work? Well, looking straight at paragraph 6.5.2 of Ind AS 109, it's defined as a hedge of the exposure of changes in fair value of a recognized asset or liability. The secret is right there in the name. It's all about hedging against changes in value, not cash. Say a company has a liability with a fixed interest rate. There's zero cash flow exposure there. But if market rates suddenly drop, they're stuck paying that higher fixed rate, and the fair value of that liability drops. That's the exact risk they're hedging right there.
Section 4, Understanding Cash Flow Hedges, Managing the Variables.
Now let's flip the script. Paragraph 6.5.2 defines a cash flow hedge as a hedge of the exposure to variability in cash flows. See that sharp contrast? We aren't worried about fair value anymore. We are laser-focused on those totally unpredictable cash flows.
To distill this down, and this is a distinction that was beautifully laid out in the 208th edition of the GAAP Advisors Task Weekly Newsletter, the core difference is just this. A fair value hedge protects against fixed rates losing out when market rates decrease. A cash flow hedge, that protects against unpredictable payments caused by variable rates. Fair value hedges value, cash flow hedges cash. It's really that straightforward. Let's map this to some classic real-world scenarios to see how these swaps align. For a fair value hedge, your big risk is a fixed rate value dropping. To fix that, a company uses a receive fixed, pay variable swap. On the flip side, from a cash flow hedge, the risk is those wild variable cash flows. So what do? They use a receive variable, pay fixed swap. The swap basically acts as the perfect financial stabilizer.
Section 5, Handling Currency Risk, the Crucial Exception.
Now, this is where it gets super interesting. Even the strictest accounting frameworks have their little caveats. As authored by CA Manish C. Iyer, director at GAAP Advisors, the general rule is that currency risk can be treated as either a fair value or a cash flow hedge. But wait, there is a massive exception. If your hedged item is a highly probable forecast transaction, it absolutely must be accounted for only as a cash flow hedge. No exceptions to the exception. This is exactly why you need real, authoritative expertise to navigate Ind AS 109.
Section 6.
Join the GAAP community, expanding your expertise.
Speaking of expertise, over 4,500. That is an insane number, right? That represents the total number of issues and responses on Indian accounting standards and Indian GAAP sitting right now in the massive repository on GAPadvisors.com.
And here's the absolute best part. Anybody can register for free on GAPadvisors.com to submit issues and get incredibly detailed responses delivered directly to your inbox. If you're an auditor, this is a literal game changer for documenting exactly how you tackle any Ind AS applications. In fact, the specific issue we just unpacked was featured in the 208th edition of the GAAP Advisors Task Weekly newsletter. With over 230 editions published, it is a must-subscribe over on LinkedIn. Got a tricky issue of your own? You can actually book a one-on-one consultation on your Ind AS and IFRS issues directly with CA Manish C. Iyer right from his page on topmate.io. And hey, for a real deep dive into the nitty-gritty of today's topic, make sure to tune in to the GAAP Advisors Ind AS Clinic podcast streaming right now on Spotify, Amazon, or YouTube.
Well, that officially wraps up our explainer for today. Thank you so much for your time and for exploring this with us. Please take a second to drop a like, let us know your thoughts in the comments, and hit subscribe on the GAAP Advisors Ind AS Clinic channel if you haven't already. And please do us a huge favor and share this explainer with your contacts, your colleagues, your audit and finance teams, and especially any students you know currently pursuing their CA course. Let's work together to spread this knowledge of Indian accounting standards far and wide. So, leaving you with this thought. What complex standard is keeping you up at night that we absolutely need to demystify next?